Welcome once again to India Business Insights. Today we'll be looking at Shree Cement, which is one of the biggest cement makers in northern India. It has a market capitalization of approximately rupees 92,568 crores. It reported consolidated sales of 4,299 crores and a net profit of 282 crores for the quarter that ended December 2022. While Shree Cement is a more than 4-decade-old company, it has seen a sharp jump in its size, profitability, and its market capitalization in the last decade or so. While it ranks fourth in India in terms of revenue, its market cap is higher than its much bigger rivals, Gujarat Ambuja Cements Limited, and the erstwhile leader in the Indian markets, ACC Limited. It is also ahead of all other companies apart from Ultratech in terms of profitability. Let us look at how it got there and why it is more profitable and valuable than other companies. Before we do that, I would request all of you to like and share this video. Please also consider subscribing to our channel. We now post high quality and well researched videos on a variety of topics related to doing business in India almost every day of the week. Introduction. India is world's second largest cement producer with 540 million tons per year of cement production capacity with a production of 356 mtpa and accounts for over 8% of the global installed capacity. The global cement market size was valued at USD 326.81 billion in 2021 and is projected to grow from USD 340.61 billion in 2022 to USD 481.73 billion by 2029, exhibiting a CAGR of 5.1 during the forecast period. The history of cement industry in India began in 1904 when the first cement factory was started in Chennai but was not too successful. But nevertheless, India was relentless in its attempt in 1913 to 1914 started the manufacture of Portland cement on a large scale with Dye Indian Cement Company Limited. By 1934, there were about 11 cement companies, out of which 10 merged into Associated Cement Company Limited in 1937. The Dalmia Cement Group was formed, which set up plants in Bihar, Tamil Nadu, and Punjab. By the year 1947, there were 18 cement factories with an impressive total installed capacity of 21.5 lakh tons. The Indian cement market size reached 364 million tons in 2022. Looking forward, IMARC Group expects the market to reach 483 million tons by 2028, exhibiting a growth rate of 4.94% during 2023 to 2028. The Indian cement sector accounts for about 1.2% of country's GDP and employs more than 0.5 million people. India has a total of 210 large cement plants, out of which 77 are in the states of Andhra Pradesh, Rajasthan, and Tamil Nadu. Nearly 33% of India's cement production capacity is based in South India, 22% in North India, 13% in Central India, 13% in West India, and remaining 19% in East India. Shree Cement Limited Overview. Shree Cement Limited is one of the India's premier cement makers. The company is one of the largest cement producers in Rajasthan and is the largest single location manufacturer in northern India. The company's manufacturing operations are spread over North and East India across 6 states. The company has a consolidated cement production capacity of 46.4 million tons per annum and a power generation capacity of 771 megawatt. The company is an energy conscious and environment friendly business organization. Their manufacturing units are located at Biwar, Ras, Khushkhera, Suratgarh, and Jogner, Jaipur in Rajasthan, Lakshya, Roorkee in Uttarakhand, Aurangabad in Bihar, Panipat in Haryana, Baloda Bazar in Chhattisgarh, and Bulandshahr in Uttar Pradesh. The company is headquartered in Kolkata, India. They have various products under their portfolio, namely Shree Ultra Jangrodhak Cement, Bangur Cement, Rock Strong Cement, Concrete Master Roofing Cement, Bangur Power Cement, Shree Cement. Shree Cement Limited History. Shree Cement Limited was incorporated in the year 1979. The company was promoted by Calcutta-based industrialist P.D. Bangur and B.G. Bangur. First plant in Biwa started production in 1985 and in 1997. Second plant with a capacity of 1.24 mtpa was commissioned. During the year 2003 and 4, the company installed a 36 megawatt captive power plant, which translated into a complete self-dependency and significant savings. Until this stage, it had experienced relatively slow growth in its first 2 decades of existence. However, the growth on steroids had yet to come. During the year 2005 and 6, the company commissioned a greenfield plant of 1.5 million tons per annum mtpa capacity at Ras. The company commissioned one unit of captive power plant of 18 megawatt capacities at Bangur city in order to meet the power requirements of the expanded capacity. In April 2007, they launched their third premium cement brand in the market called Tough Cemento 3556. During the year 2007 and 8, the company completed two clinkerization units, namely Unit 5 and Unit 6 at Bangur city, and two grinding units at Kushkera in Alwar, Rajasthan. Thus, the company attained a total capacity of 6.83 MTPA of ordinary Portland cement. During the year 2008 and 9, the company completed their 1 MTPA clinkerization unit, Unit 7, and increased their thermal power generation capacity by commissioning 18 megawatt turbine generator at Bangur city. In March 2010, the company commissioned 1.8 MTPA clinker grinding unit both at village Udaipur, Udaisar Tehsil, Suratgarh in Sri Gangadhar district, Rajasthan, and Akbarpur Od Tehsil Lakshar in Haridwar district, Uttarakhand. In 2014, Shree Cement commissioned two new cement units of 2 MTPA capacity, one at Bangur city and other at Aurangabad. On 15th, 2015, Shree Cement announced that the company has completed the phase 2 of the RAS new cement unit at Bangur city, RAS district, Pali, Rajasthan, and enhanced its cement production capacity by 2 MTPA. On 27th April 2015, Shree Cement acquired 1.5 MTPA grinding unit at Jayaprakash Associates Limited, situated at Panipat in the state of Haryana, on a going concern basis for an aggregate consideration of Rs 358.22 crores. In the year 2015 and 16, Shree Cement commissioned several units which included clinker manufacturing unit of 1.5 MTPA capacity in Chhattisgarh and cement grinding unit of 2 MTPA capacity at autoclaved aerated concrete blocks project having a capacity of 3 lakh cubic meters per annum at Bulandshahr. On 7 November 2016, Shree Cement announced to set up a new cement grinding unit of 3.6 MTPA with an initial plan to set up a blending unit in Rajasthan with the estimated cost of Rs 300 crores. The company also announced to set up a new cement unit of 5.5 MTPA in Bihar at an estimated cost of Rs 335 crores. The board of directors of Shree Cement at its meeting held on 30th January 2017 approved setting up of an integrated cement plant having clinker capacity of 2.8 MTPA and cement capacity of 3 MTPA at village Kodla in Karnataka. The total investment of the new plant is estimated at Rs 1800 crores. On 1st November 2017, Shree Cement announced that it has participated in the auction for coal linkage of Coal India Limited for captive power plant subsector and won the coal linkages in the state of Chhattisgarh. In February 2018, company commissioned two new cement grinding units having a capacity of 3.6 MTPA at Udaipur and second at Aurangabad. In 2018, the company acquired the Union Cement Company and holds a stake of 97.61%. The company also acquired Raipur Handling and Infrastructure Private Limited for Rs 59 crores. During the financial year 2018 and 19, the company completed an integrated cement plant having a capacity of 3 MTPA at Kodla in Kalaburagi district of Karnataka. It commissioned balance 6.3 megawatt out of 21 megawatt wind power plant at village Kustag Kopal in Karnataka. During 2019-20, the company completed clinker grinding unit having a capacity of 2.5 MTPA at Saraikela in Jharkhand. During 2020 and 21, the company commissioned commercial operations of clinker grinding units having a capacity of 3 million ton per annum at Ataghar Tehsil in Cuttack district of Odisha. During financial year 2021 and 22, the company commissioned commercial operation of clinker grinding units having a capacity of 3 million ton per annum at Patas in Pune district of Maharashtra and clinkerization unit having capacity of 12,000 tons per day 4 MTPA at Baloda Bazar near Raipur in Chhattisgarh. The company has 4 locations with integrated plants in India and 1 outside India and 10 locations with standalone grinding units in India. Key cost indicators. The company, like all its peers, faced input cost pressures during the spiraling inflation as a result of rising coal, diesel, and other input costs. Key details of 2021 and 22 were as below. Raw material cost, it increased by 20% from 834 crore rupees in financial year 2020 to 21 to rupees 1002 crores in financial year 2021 to 22. Power and fuel cost shot up by 52% compared from 2082 crores in previous year to rupees 3161 crores in financial year 2021 to 22. Logistics cost, it witnessed an increase of 7% from rupees 3037 crores in financial year 2020 to 21 to rupees 3241 crores in financial year 2021 to 22. Financial growth, sales volume, cement and clinker witnessed an increase of 3%. in 2021 to 22 from 26.84 million tons of the previous year to 27.74 million tons during 2021 to 22. However, net revenue from operations grew by 13%, rupees 12,669 crores to rupees 14,306 crores. The company was able to pass on some of the increased costs by raising prices. However, profit before interest, depreciation, and tax for the year 2021 to 22 came down by 5% to rupees 4,185 crores compared to rupees 4,413 crores of the previous year 2020 to 21. So the company has been growing with a CAGR of 9.83%, that is 9,833.1 crores in 2017-18 to rupees 14,305.88 crores in 2021 to 22. The company has delivered EBITDA growth of 9.97 CAGR over the last 5 years, that is rupees 2861.8 crores in 2017 to 18 to rupees 4185.18 crores in 2021 to 2022. Cement Limited has enjoyed some of the highest profit margins. This is largely due to the fact that it has been in relatively profitable markets with abundant raw material availability. Further, most of its capacity, unlike its peers, has come up in the last 10 to 15 years. Due to this, its manufacturing costs are relatively lower. Its plant at each location are much larger than its peer groups. In all the location it operates in, it has been able to find enough market to ensure that its very large plant's capacity is adequately utilized. Even though the company has grown very rapidly, its debt levels are extremely low. While Shree Cement has been able to expand in profitable geographical niche, it may now need to expand to other locations which may not be equally profitable. It can also look for mergers and acquisitions with regional leaders in different Indian markets. It would face a strong competition from Indian players when it tries to expand its operations pan-India. There is a high risk involved in expanding into other parts as brand awareness is lesser right now. Strategy so far has been to build a very large capacity at each location it operates in and have a dominant market share in these locations. It may not be able to repeat this strategy where its brands are not well known. While there is a large investment cycle backed by government investment in infrastructure is starting, high interest rates may dampen the construction demand for the real estate sector, in particular from the housing sector. Also, the capacity of cement industry in India is highly fragmented, but the top 5 players' capacity barely adds up to the half of the market. This is highly competitive market. All the top players have low or zero debt and are looking to expand rapidly. We could get into a period of oversupply in certain markets. The stock market expects Shree Cement to do well and has given it a market capitalization of rupees 92,568 crores with a PE of 66.07 in March 2023. Highlights of first half of fiscal 2023. During the first half of fiscal 2023, sales volume of SCL increased approximately 15% on a year-on-year basis in domestic market driven by ramp-up in capacity and healthy demand. However, earnings before interest, tax, depreciation and amortization margin fell 27.7% due to higher input costs, especially power and fuel costs on account of rise in coal and petcoke prices. The EBITDA margin is expected to improve in the second half of fiscal 2023 with expected increase in realization and softening in prices of coal and petcoke. The financial risk profile continues to remain robust as indicated by gearing of 0.12 times as on March 31, 2022, supported by healthy liquid surplus of about rupees 8,000 crores as of September 30, 2022. Key ESG highlights of SCL. SCL plans to reduce the carbon footprint of its entire production process. It aims to reduce Scope 1 emissions by 12.7% and Scope 2 emissions by 27.1% by 2030 on base of fiscal 2019. In fiscal 2022, the share of renewable energy in the overall energy consumption of the company rose marginally to 48.2% from 47.9% in fiscal 2021, which is the best in the industry. During fiscal 2022, SCL announced plans to set up solar power plants with capacity of 106 megawatt. SCL was the first company in India to utilize 100% petcoke in its cement manufacturing. SCL targets a thermal substitution rate of 5%. The company is currently working on ensuring the continuous availability of alternative fuels and is collaborating with other industries for the same. Its alternative fuel rate was 9.8% in fiscal 2022, which has gone up from 6% in fiscal 21. future plans, the company is continuously adding capacity across various regions. In the northern region, the clinker unit with capacity of 3.8 MTPA and grinding unit with capacity of 3.5 MTPA in Navalgarh, Rajasthan is expected to be commissioned by the end of fiscal 2024. The clinker unit of 1.5 MTPA and grinding unit of 3 MTPA in Guntur, Andhra Pradesh is likely to be commissioned by December 24. The company's wholly owned subsidiary, Shree Cement East Private Limited, is also setting up a grinding unit of 3 MTPA in Purulia, West Bengal. SCL is also setting up solar power plants with a capacity of 106 megawatt across various locations. Commencement of operations in these units will further strengthen its market position. The company is likely to undertake capital expenditure of rupees 2,500 to 3,000 crores each year to increase the domestic capacity of around 57 MTPA by fiscal 2025. The capex will be funded through surplus in cash accrual and liquidization of assets.